What's going on, guys? Time for a little late night recap here. I want to go over some of the things and breakdowns on how we predicted the bounce coming up and calling it for our chat, and just seeing some of the sequences and Fibonacci's play out and where we got them. So we're going to keep on SPY here. And if you've been trailing with us here, we got out of most of our long-term shorts here. We're right at the very bottom of this overnight 100 EMA tag on NQ. So we got very lucky in a 300-point dump open. That was last week, and then we kind of moved into this week after we closed in those shorts, and we were looking for a bounce. We're going to go over kind of why we were looking for that bounce. So I called a 100 EMA shy on the daily chart right here. This green level is the 100 EMA, and as we seen a shy there, we had a couple targets of our short, which become long entries, kind of play out. So we've been utilizing this fib for quite some time. I'm sure you hear me say this a lot, broken record of the fib box on this one, but we're going to come down from the short here all the way down to the golden pocket or to the zero fib. And usually once that weekly fib has made its way to the 2618 and then completed a down cycle back to the 0%, literally the entire fib range back, it usually gets a bounce. So coming into the 100 EMA daily, and per the rules of our systems for the elites trading here, we do have an opportunity to read some moving averages. So as we kind of lost the 9, and we'll come back to this candle, but 4-4 daily candle was also a very big precursor to the downside fib. And we'll go over why that is as well. So the Fibonacci for that weekly retracing back to that zero line, right? And then the moving averages. So the shy of the 100 EMA, when something breaks through the 50, comes down to the 100, we get either a shy or very close. We'll get a bounce back up towards that 50 area, generally as high as maybe 512.50, and continue that downside. Now, there's a lot of things that make me think that this is just a temporary bounce continuation, because a lot of the time, we don't have any backtest of confirmation on these moving averages. If I tuck way back here to that October, August, September rule of 3 here, we got 3 downs before it popped back up. This little general area becomes very, very, very clear what's going on. So we have no 100 EMA tag, no 200 EMA, no 200 SMA, and no back test of the 666, all simple moving averages except for the 100, which is an EMA. So all of these moving averages have no back test since that little force up happened back during our bearish sentiment trades, which we were short biased on. Once it recovered the 200s, it just flew, and it just held the 10 SMA, right? And just plowed a rate to all-time highs. Now, when we finally break back down, we have a law of moving averages that need confirmational back test before bounce. So when it broke through the 50, it's going to magnet to the 100 or very close to the shy, come back up towards that 50 and 10 SMA area. We can start to look at some of the fibs from the 4-4 candle, and we'll go over that in a sec. We're going to see another peak to a lower high, come back down to track that 100 EMA, and then potentially track back those 200s lower EMA and SMA that are not yet back tested as well, because price action will eventually back test. And since we have no back test right now, well, that's going to be something that we look for in the future. Now, I'm not saying we're going to get just a little tiny pop to a, catastrophic daily dump of 15, 18, 4%. That's more of a correction, obviously, nothing more than that, but that's pretty catastrophic. Now, if we do get that, our team is instructed to buy these dips, and we'll be long into the end of 2026 here myself, but that's neither here nor there. We'll go off on a different chart on that one and a different spiel. But when these back tests and 200s happen, this roll rate here, it's going to take some time. But once that happens, we're going to get able to get to that downside. And nothing goes in a straight line. They need resets. So if something is dumping for, a month straight, week straight, and we start to see indicators rolling into fresh territory of too low, like the RSI and a MAC going through the center line of the cross, and it needs another wave up, and the RSI is getting very close to oversold. It needs a couple of days to retrace. So there's a lot of reasons that we picked long the last couple of days, and let's get into a couple of those bigger reasons. Now, it's about the 4-4 candle here. It's day 4-4. This candle had an immense amount of volume and an immense amount of range, right? So right before this huge short upset here that plowed to all-time highs, we did put in this 4-4 candle directly after with monster volume, and that is even with the all-time high volume doji, which is very big fight above and below the all-time high, right? Just a huge fight because it doji. So we have this monster candle, and the reason I use this one is because it's an engulfing candle, right? And these Fibonacci's play out on high algorithmic probability, and I fibbed out the high low here, or the body, both work out very well. And then I wanted to see where it was going to hit. Of course, the Fibonacci, just like we talked about the weekly, has a setup in sequence that it needs to go through. So here's your box on the Fibonacci, and once the golden pocket is lost, it comes down to the 0, right? So it hit that 1 day, 2 day, came down to the bottom of that candle, which is a 0 fib. popped back up once and then broke that fib. And once we were outside of that range, we were obviously going to track down our targets, 1618, 2618. And after the 2618, we have an opportunity to come back to the 100 fib, okay? And then potentially head back down. So that's another really big catalyst, despite a lot of the macro on the daily moving averages that we had seen here. If you look back a couple of trade days, this green line right here is the 100 EMA on the daily. You can see that hit between after hours and pre, right at the end of after hours there. Now, that's why we call it a shy. It actually didn't tag during live trading hours, which is these black boxes here. So the next day where it got very close, it shied it and left a gap. And that's where we went mega long for the next 2 days, right? And let's take a peek now and look real close where that fib was. Remember 44's 2618 fib we were talking about, right? 4-4 body, look at that right there. That's the 2618 from the 4-4. So here's that 100 EMA after hours. Here's the 2618 from that 4-4 candle live tag right here. Price action finally came into that tag, also causing that upside. And that's why I had price targets up to the 1618 on that same Fibonacci. And I called long all the way to 505.72 for today. So anything above that, zero fib. Again, this is the weekly Fibonacci. And last but not least, we'll go over why this weekly is so important. And I told everybody we're going to go back to the top of the golden pocket, which is about here, and as high as 504, and then push to the 1618, 505.72. Just under 506 was my final target for the day. And it did stretch its legs all the way up there. So we called over 100 and some points on NQ, and then we were correct about this one and noticed the force up very early and called 47 plus points on ES. Now, let's get into that last little metric here that was very important, the weekly chart, okay? The weekly chart is where we got these teal Fibonaccis and picked the top of the market there. And why is this so important? Well, when you open up in an engulfing week, right? Let's make this a little easier to see here. Big red candle like that. When you open up in an engulfing week here, you have this red, giant, enormous candle, right? And if you don't get continuation off something like this, a huge red week, and you don't open low and start putting in some nasty candles to the downside, you're going to bounce if you hold on to the body of that candle. So what I like to do on very high range big dumps, and then when the price action opens inside, so this green candle here is opening inside our large red weekly engulfing monster candle, right? So what I do is I take the fibs out, and I say, well, if this body right here becomes a hold of support, and I always make these teal for me. If we hold that 100 fib or 0, whatever way you drew, it doesn't really matter. If you hold the close of the weekly right here, you have a very high opportunity to trace back to the golden pocket, which is right here. Okay. This is our whole fib range, which is the body of the candle in the box. So if we open up inside our friend, the 100 fib here, we have an opportunity to backtrack all the way to the golden pocket, right? So that's another huge reason that we stayed inside that candle in the weekly and had an opportunity to push all the way back up. So again, we called this live. We had some really good short counter trend scalps here. I was looking for some trend scalps off the teal level here. We got a couple shorts here. We got one up here. There's another 50 fib. Q's had a really good short call as well. We posted it on Twitter. We managed this one through, but another one on Q's here. I wanted to see a nice little over under pull, and that came in right there. Here is 423. So that was another fib, which is from the data from a few days back on pre-market that we had again completed over the 1618, 2618. Next is 4236. Had some big abrupt red candles there, finally consolidated through it and ended up moving past. Now that was all part of the plan because we did want to get to those weekly retrace candles, right? On the SPY. So when you look back at a lot of these plays here, was drive off the weekly fibs, and that was by far the most important, along with some daily metrics and including those moving averages. Now, for the remainder of the day and coming in overnight here, take a peek at the futures market, we're still kind of climbing higher right here, which pretty normal, right? So if you go back into the weekly right here, we're getting the same exact effect. Now, this is the same setup I just showed you on SPY and Qs. I do this on the futures overnight if we're trading. We are inside the 100% fib. We are going to retrace to the golden pockets or even higher. And that last golden pocket is 17,776. So just a hair under that 17,800. So That Fibonacci is the 3820, and that's probably where we're going to have our next little bit of a tag pullback. So I think the futures will probably continue a little bit of this grind up, and we'll have a little bit of static in between either the 10 SMA, which is this dashed blue line here, or the 17,776.73. And that is the top of the golden pocket, because the golden pocket on the weekly is right here. Here's the 50 fib, and here's the 3820. So this entire thing is the pocket. So we will complete heading up to that pocket, most likely hit this overnight. Then we can kind of watch for direction. You can take a counter trend scalp short up there, and we'll have to see what the rest of the week provides. So thanks for tuning in and catching in, and stay tuned for the next.